You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the Options Insider, as well as, of course, from the ever-exciting radio network. Hope you guys are enjoying your regular fix across the broad spectrum of shows that we put out throughout the week. It's a lot of shows, a lot of content, a lot of work, but we like that you guys enjoy it. Hope you guys are enjoying it there. At the end of the day, you guys know how to get us on this program. Of course, you can join us live every Friday, 1 p.m. Central, 2 p.m. Eastern, or after the fact on pretty much any device, any platform on the planet. If we're not on some obscure one, let us know. We'll look into it. We're pretty much everywhere you need to be. Just search for Vol Views or indeed search for our network, and you got it all. And of course, however you listen, live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. Send those questions in because we like to hear from you. At the end of the day, it's all about you guys. And joining me on the program today to help me hold down and make sense of this crazy world of volatility that we find ourselves in today. First off, we are joined once again. He hasn't been on a little bit, but I'm pleased to say he's back on today, holding down the MIAX hot seat, Mr. John Smollen, the EVP and head of Exchange Traded Products and Strategic Relations over there at MIAX. John, welcome to the program.
Mark, thanks for having me, and thanks for getting that title right. You know, I know it's a troubling task, but I appreciate it.
Yours is pretty easy compared to some that we have to deal with. Yours is fairly low maintenance. I do believe we are joined now by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmeline Capital. Mr. Meatball, welcome back to the program, sir.
It's so wonderful to be here. I'm in such a great place. The world is my oyster. La-di-da, kumbaya, kumbaya.
Which great place do you find yourself in today? Is it a Costco, a gas station, a 7-Eleven? Where's the big place?
I wish. I'm coming to you live from the 30th floor of 190 South LaSalle. I'm enjoying the scenic heart of Chicago's financial district.
There you go, the global capital some might say, of OptionPit.com and indeed Carbon Line Capital. And we are indeed the global capital of talking about volatility, so let's get to it with a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is indeed the portion of the program where we review the week that was and indeed still is. Some vol trading and trending and analysis and unusual activity and all sorts of fun perspectives coming into the tail end of the week. The market's kind of unched, kind of shrugging its shoulders, not really sure what it wants to do today. This is on the tail end of pretty much a week that saw a lot of upside, a lot of green on the screen, a lot of red on the volatility screen coming into today's session. Again, a mixed bag. The S&P, actually the laggard, off to slightly unched pretty much on the day. And then we got NASDAQ off about 0.25%, the Dow up about 0.25%. So S&P playing the Goldilocks, the porridge just right. Not too hot, not too cold out there. Of course, all that means volatility kind of mixed today, but across the spectrum of the week, we're at about, looks like a 14.10 or so on VIX Cash, which is actually up a little bit from where we were just before showtime. We were at about a 13.90, which put us down over a handle and a half from where we were this time last show. And of course, our old friend Spikes was at about a 14.20, ticking up a little bit, now at about a 14.40, which puts us up, or I should say down, about 1.5 handles from last show as well. And of course, our old friend VVIX, aka the volatility of volatility. Remember, at the end of the day, VVIX doesn't just track the direction of VIX, it tracks the volatility of it. So movement in any direction, that counts. So ticking up a little bit this week, up about 2.5 handles, right around to a 99.5, flirting with that triple digit level, but not quite there just yet. So let's go back around the horn. John, you haven't been on a little while, so maybe we'll start with you. I know we got some fun activity. We'll get to that in a little bit, things lighten it up in your neck of the woods. But since the last time you joined us here on the program, sir, what's been lighting up your tape? What's been catching your eye in the world of volatility, sir?
Well, most of my work has been, pushing getting us to have a futures product. So, as we've talked about in the past, the product will certainly be enhanced by having a futures product. So look for us to make an announcement, on as we get closer and closer. And, our goal is to have something out by, November, December this year. And so we're working on liquidity. We're working on partners for that. We're working on everything that's required to make that product be as competitive as possible. So that's what I've been doing, Mark, for the last 8 weeks.
Well, I guess when you're the head of exchange-traded products, it does fall under your pretty broad purview over there. And it sounds like, we were talking to Simon last week. He made it sound like things are pretty much on track. Is that your perception as well? Things are pretty much in line with what you expected right now? You're on schedule?
Yeah, we're partnering for release with the Minneapolis Grain Exchange. And so, they're taking the lead with the people on that side of the universe, the CFTC, and as you know, that CME is the distribution partner for MIAX. So they're working with those, obviously, two huge players, the CFTC and the CME, and they give us the guidance they've given us is that things are moving along well, and that we should see something pretty soon.
Glad to hear it. I know a lot of our listeners out there looking forward to having that underlying to sling against the spike. So hopefully, on schedule, listeners, hopefully we'll be seeing that soon. Speaking of seeing things, Mr. Meatball, it's been an interesting week from a vol perspective. What's been coming across your radar? What's been lighting up your tape this week, sir?
Yeah, it's been quite the collapse, hasn't it? They really didn't like, the vol gods are not fans of less certainty, of more certainty, to say the least, because I'll tell you, they have just come in and absolutely demolished volatility and, interestingly, to a much lesser extent, volatility premium in terms of the VIX futures, the spike, the implied spike future, and the Viking and the VVIX. All VVIX and Viking, if you could see Viking, would be registering really high volatilities. And if there was a spike future, which there will be, and the VIX futures have, especially going out to October, have a really nice contango premium built in. We've not seen this kind of contango premium in, I don't know, Mark. When was the last time you saw a future with 30 days out carry like a 3-point premium over the cash index?
It's been a while. It's been pretty much a flat year or a backward year, right? So to see the nice, healthy contango come back, it's kind of like return of an old friend.
Yes, it is. Hello, old friend. We've missed you, Mr. Contango.
Hello,
Welcome
old
home.
friend. Good old juicy contango. You know, you need a little juicy contango out there in the volatility world to make things happen. By the way, let me point out here at the top of the show, I'm looking at Spikes right now. Spikes is at a 14.38. And as you recall last week, I so generously let you go first. But before or after second, I went third to be a charitable fellow in the crystal ball. But as you recall, I wrote down and even said, after you made your pronunciation, I said 14.35 feels pretty good for me this time next week. I moved it up to be charitable, I think, to around a 14.65 to give you a little room to breathe. But 14.35, looking pretty good right now. I just got to put that out there now because you never know what happens over the course of the next hour.
The spike index, it's right there. The VIX index is 1395, and my guess was 1412. So I got to say, I am straddling. I'm right in between the straddle of the two. I'm basically a red dart bullseye if you take the mean of the two, aren't I?
So I guess what matters more, is it mean of the two or is it being close to an exact bullseye on the one? That's the challenge of predicting two with one prediction, you know?
It is true.
A lot of different ways to interpret it. So I guess what we're saying, listeners, is we're both claiming victory here at the top of the show. We'll see how it unfolds.
I'm claiming more victory than you, though.
I don't know. Mid-market versus bullseye, I don't know. I might want to lean the latter. You know, I think I like that. Anyone can be mid-market. You know, that's fine. But, you know, hitting the nail on the head, that takes a special individual.
Well, but that wasn't your actual guess, so.
Well, it was until I changed it to be charitable to you, which is why I'm pointing that out. Which is on the record. I did say it last week. I said 14.35, but I will adjust it north to be charitable. So in my hosting duties, I adjusted it north, but in my heart of hearts, I was at 14.35, which is pretty much looking exactly spot on. Which you gotta like. Speaking of things you gotta like here, I don't know if you gotta like it, but as Mr. Meatball alluded to, our old friend Contango back, looking pretty healthy, looking pretty rich out there. It has been a while since we've really sat down and said, oh, look at that spread. In fact, we stopped quoting it. We used to quote it a lot here on the show, what the spread is between the cash and the front month and the second month future out there. And we kind of stopped doing it because it was not really much to talk about there. If it was backwards and the cash was over it, or it was flat. It's been a weird year if you've been watching the futures and indeed listening to the show. Now we're back to the return of an old friend, the healthy contango out there from the futures one to the next, looking at roughly about 2 1/3 points, looks like, between that SEP and OCC future. So a nice healthy bid there in between the cash and that front month future. You're talking about 3/4 of a point or so, but again, that vacillates around quite a bit because we know the cash vacillates around quite a bit as well. Mr. Meatball, I know you mentioned it earlier, the kind of return of our friend out there, the contango. Has that been lighting up your crazes in the pit chat? I know they like a nice contango. It sets up a lot of other trades for them. They've been lighting it up in the pit chat this week?
Yeah, I mean, that's been where all of our trades have developed around, is this extension of contango, this extension of, of kind of vol decay in VIX futures and spike implied futures through the options. There's just a massive amount of premium that has that is going to suck out over the next few months if things stay as it, or next few weeks if things stay as is. So there's just all kinds of trades that are developing in VIX and VXX and spikes.
Speaking of spikes and trades developing, you know, John, I think they heard you were coming on today, and they wanted to make your job a little bit harder, maybe a little bit easier, depending on how you view it, because we got some size stuff to break down today. I was just about to say, you know, the OI coming into today is about close to what it was last time, and that is still true, because as we all know, OI updates once a day. But in the interim, this morning, I know, John, I was joking with Shelley a few times here on the show that it seemed like Tuesday is the day when Spikes really lights it up. So we had to start calling it Super Tuesday. But now maybe I need to amend that to Super Friday, because looks like things were lighting it up again today, sir. Why don't you walk us through what was going up out there? A lot of contracts changing hands at Spikes Land today, sir.
Yeah, it did kind of catch us a little bit by surprise, but I think not. We kind of get everything secondhand ourselves, and I don't know why the timing was different. I know that really can't put my thumb on why today, or why they traded, but it's a strategy that the firm has, and they follow it, and they thought today was the right decision right there to move it, but not much more than that until we'll probably get some more color on it by next Tuesday of next week. We'll have a better handle on it.
Yeah, it looks like our old friend, the one-by-twoer, I guess you can call him, has returned. Remember last week, listeners, the size OCK 2030 1x2 6,000 by 12,000 was the big outstanding position in the Spikes OI. Worth noting, there's a 6,000. Actually, there was 1x2 in SEP as well, 3,000 by 6,000. SEP 1725. That's obviously going away next week. So maybe that prompted the decision to pull the trigger this week before the SEP maybe goes off the board. Either way, putting up some size here on Super Friday now at Spikes Land. So they're taking off. Looks like that OCK 2030 here going up in a couple of big lots. We saw the 30s, or let's start with the 20s. The 20s went up a total of about 6,000 times in some funky blocks, 4586 and then 1,414, both for $1.25 against about, looks like 12,000, so 91.72 and 28.28. Some good round numbers there going up for 15 cents. So that's the 1x2, 6,000 by 12,000. So probably going to go out on a limb and saying unwinding that and then rolling it out there to Nove. So keeping the party alive, keeping the love alive. This time they like to play with the strikes a little bit, and that seems to be the case again. And it's not surprising. The volatility situation evolves from month to month. Where we are in the vol spectrum is different from one month to the next. So just expect them to do 20-30 every time doesn't really make sense, and that's pretty much what they did here this month. Looks like doing, again, the same numbers, 6,000 by 12,000. This time rolling it down a little bit, which, again, we've seen vol come in, so that makes sense. Nove 1827 this time. So 2 handles on the downside, 3 handles on the upside there. It looks like it's doing it for 235, 6,000 times by 60 cents, 12,000 times, so $1.20, so aka $1.15 on the whole thing here. So interesting. I don't know, John, if Super Friday has the same ring to it that a Super Tuesday does, particularly when we're entering into the political realm again here pretty soon in a few months here in the U.S. But still, you got to be pleased with all this paper going up. And the fact that they continue to put it up, they continue to roll it. When we first saw this paper go up, we weren't sure if it was one and done, maybe a little bit of a trial. Now they've been doing it from AUG to SEP to OCK and now to Nove. So that's got to at least put a smile on your face there that they continue to keep the party alive, sir.
Yeah, it does. One of the interesting things, as we there's a process to work towards getting the markets where we can be competitive for just the retail player, the 5, 10, 20 lot player that is willing to cross back and forth across the bid and the ask, and they think that there's the markets are tight enough that they're willing to do it. So as we get closer to that, the one thing that I think I'm very excited about is that when these big orders get put out for either RFQ or for competitive pricing, that the pricing that we're getting back are very comparable to what the same execution would see in the competitor's product, the VIX, and that the customer, which is I'm sure is probably some type of, well, if it's not a market maker, it's some type of fund, that they have their own internal best decks, and they're happy with the prices, and the prices are saying, hey, I'm happy with what we're getting, and I want to go back, and I'm okay trading in that. So that's very positive, and it's something for us to really build off. So it's exciting.
Yeah, well, the proof is in the pudding. If they weren't happy, right, they wouldn't be coming back month after month to continue to roll. So clearly clearly they're liking something that they're seeing or that they're getting out there. And we'll look forward to seeing and being able to parse more, particularly as this future comes online. And you're right, seeing some of the more retail folks trickle in there, the 10 lots, the 20 lots, the 30 lots, starting to see some of that, obviously overshadowed by the big tickets out there. But still, interesting to see that this is starting to get out there. Now, I am looking forward to seeing when we have that future online, how that mixes things up and changes things up. Let's move on out to the VIX. You kind of just mentioned it there, John, and it was a decent week, all considered decent volume week out here for VIX options. The ADV still down, but remember, it was pretty rich. It was over 700,000 not more than a week or two ago. Now it's down to a more seasonally normal 524,000. That puts it down about 14,000 from our last show. Today, doing decent paper, about 460,000 actually on the tape. So threatening that ADV. Looks like some of that may be coming maybe from today from the return of our old friend 50 Cent. We'll get to that in a little bit. First, let's break down what the top size positions are out here in VIX land. Top 10. Number 10 here, SEP 18's 145,000 on the books there. Number 9, the OCC 25, 146,000 there. Number 8, the SEP 16 puts are first and indeed only put in the top 10. So take that for what it's worth, listeners. It used to be a lot of puts out there. Now it seems pretty call biased. Maybe a sign of where we find ourselves in the volatility spectrum these days. 159,000 of those open. Number 7, the OCC 28 calls, 169,000. Number 6, the OCC 40s. Interesting. A very optimistic strike. 172,000 there. Number 5, the SEP 30s, 199.7, just a tick under 200,000. Number 4, the SEP 23s, 217,000. Number 3, the SEP 20s, 223. Numero dos here, the SEP 24s. Nice little healthy call strip there in SEP, 231,000. And number 1 with a bullet, the SEP 25s, 345,000. Actually pretty light for the top of the top 10 in VIX land. Usually we see that well north of 400, if not 500 or even 600,000 for that number 1 spot. Today, a little light, 345,000. OI pretty decent, about 8 3/4 or so million contracts outstanding, about 6.5 million on the calls, and about 2.25 million on the puts. Let's go out before I start breaking down the volume. Mr. Meatball, anything of note registering for you this week, sir, in terms of paper coming across your screen or going up in VIX land?
I mean, it has not been a very busy week for VIX options at all. A lot of what I've seen has been call selling, little bit of like longer dated put buying. Kind of the biggest stuff I've seen really has been a SEP 14 half OCC 15 put roller and some OCC 15s being bought. That's really been the biggest orders I saw all week. I know like massive 75 or 80,000 contract trades are lighting up my screen here. I think the biggest contract trade all week in terms of one trade was the SEP 14 half OCC 15 put, where paper sold OCC and bought SEP and collected between 20 and 22 cents.
Well, there were some big prints going up today. You probably saw these. Maybe I wonder if this is the return of our old friend, the Mr. 50 Cent, because looks like they're upside buys. It was the OCC 24s. These are expiring on the 16th, going up 50,000 times for not quite 50 cents, but 58.9 cents, and then go up another 45,000 times. Let's see, what was the time frame on that? Those were pretty much within a minute of each other. So total of 95,000 contracts going up for 58.6 and 58.9 cents. Mr. Meatball, I think that's the return of our old friend, Mr. 50 Cent, coming back to play again.
I don't know. Yeah, I guess that is the one strike that has some volume today. There's almost 95,000 on that, or there's over 95,000 on that strike against open interest of about 50,000. So I don't know if it's 50 Cent, but it's definitely an opening buyer. They seem to like it.
Let's just say it's 50 Cent because it sounds fun, and it's about 58 cents. So why not? Who's to argue with us?
It's 58 cents.
Exactly. It's 58 cent. Not quite as sexy or as fun, the 58 cent moniker, but hey, it works. Also seeing a big print in the OCC 30 calls today going up. I say big in relation to today here. 20,000 going up for 33 cents, pretty much mid-market there. Also a bit of a vertical, 20,000 of the OCC 2022 vertical going up for looks like 27 cents. Seems like paper selling that guy, actually. So selling a little bit of upside again. And then yesterday looks like the volume leader of the week, 636,000 contracts on the tape. The big prints coming in what looks like maybe a bit of a roll. OCK to NOV about 1 by 2. Not quite 1 by 2, 1 by 1.5. 10,000 of the OCK 17s going up against 15,000 of the NOV 17s, doing that for 55 cents, but doing it 10,000 by 15,000 times. So maybe a bit of a house money roll. Usually when we see those, we call those house money rolls, listeners, because they're doing more size in the second leg. Could be they have a reason for it, too. They want that ratio and make the premium line up somehow. But often when they're doing that, we've seen in our unusual activity, it's because they're sitting on a little bit of house money. They've made some money in that first leg, and maybe that OCK 17 is going off for 201. Maybe they're looking pretty good on those, and so they're putting a little bit of that capital back to work, doing a little bit more size on the second leg, the NOV 17 leg. Hence the term house money roll there. Also seeing looks like another roll. A lot of rolling this week. I guess this is relatively quiet week. Get your rolling done here. NOV to DEES 18 roll going up 20,000 times for 17 cents. And our roll from the 1 by 2 popping up yesterday as well. It was the, actually, no, I take that back. It was actually the straight up just NOV. It just went up in 2 blocks, 10,000 and 5,000 respectively of the NOV 30s for 51 cents right off the bid. So maybe doing a little bit of overwriting then to the upside. Wednesday, a little bit lighter volume, about 545,000 is pretty much right in line with the ADV. Looks like maybe another, again, kind of a bit of a theme of the week this week. House money rolls here in VIX land. People had some upside. It worked out. They take it off, rolling it to another strike. Maybe rest of this week, maybe the upside not looking that good, but it seems like it might have worked out for some of these because they got some cash to burn. They got the OCK 19s going up for $1.52, 7,350 times against 11,025 of the NOV 19s, doing that for 202, so doing that for 50 cents. Again, it's on a ratio, so pricing's a little bit funky out there. And maybe a little bit of a house money roll there again, and also a SEP vertical. SEP 2025 is going up 10,000 times for 17 cents. Again, not a lot of crazy paper until we get to Tuesday. I'm curious for your thoughts on this one, Mr. Meatball. I'm sure you probably saw it priced up. Bit of a weird one. Tuesday, lighter volume day, 416,000 contracts. Looks like we saw, maybe you can call it a straddle with the kicker, maybe a combo / synthetic with a bit of an upside call kicker. Either way, it was the SEP 18, maybe we'll call it, let's just call it a straddle for lack of a better term here, right there, going up 13,000 times like paper, probably buying the put and maybe buying both, or maybe buying the put and selling the call, which leads to that combo I was alluding to earlier against the SEP 20, so a little bit of upside calls for 32 cents. And then doing all that 13,000 times against NOV, doing it the NOV 18 straddle / combo, where it looks like they're buying call and maybe selling put. It's hard to interpret. It's all, none of it's opening. It's all kind of mid-market executions, which is always fun to parse here in VIX land against 13,000 again of the NOV 22s. Mr. Meatball, you like that notion of a straddle or indeed a combo against an upside call kicker? Did you see any of these go up this week?
I had not seen this, but, I get it. Where is it 1 to 1 to 1?
That's the weird thing. There's no ratio. It's all 1 to 1.
Yeah, that's a little funky. No SEP versus SEP combo is a little bit of a strange one. Maybe it's just someone who says, VIX isn't going to do much for the next few days, but I think it could absolutely blow up in between now and November. And so I'm going to, trade near dated gamma against long dated volatility. I mean, I guess it's certainly unusual, but could be some sort of roll against some sort of over the counter position. Maybe they're unwinding their September against some sort of long dated call. Yeah,
and usually we'd see probably a ratio to that upside, which would make it make a little more sense But we're not seeing that here. It's all just 1 to 1 to 1. So a bit of a weird one, a bit of a head scratcher, a funky 6-way straddle / combo with a call kicker. That's an interesting one out there. And again, it is definitely, I would say, against some sort of upstairs volatility position. We only see the listed leg going up, but still fun to parse nonetheless. Monday, kind of a bit of a scattershot day, 450,000 contracts on the tape. It looks like some lots of about 13 to 14,000 of the OCT 25s going up, SEP 28s as well. And looks like maybe a bit of what do we got here? A vertical. This is, actually no, there's some other paper going up here, OCT 28s, OCT 23s on the 9th, 12 to 13,000 times. Looks like we also saw a bit of a baby version of the big Tuesday trade, which was 2,400 of that SEP 16. Looks like they're buying put here and maybe selling the call. So maybe it is a bit of a synthetic against a call kicker, but they're doing it on a ratio this time, Mr. Meatball, so it makes a little bit more sense. They're doing it 2,400 times on that SEP 16 combo against 10,000, so roughly 1/4 of the SEP 19 calls for 42 cents right off the bid. Do you like it a little bit better on that ratio?
Yes, I do. That makes a lot more sense to me. And fits more your kind of standard VIX type trade.
Yeah, the ratio, I think, makes it line up. So that someone, I won't say did it the right way, but did it the normal way on Tuesday, and maybe they inspired someone else, or maybe the same guy decided to come back in and just do it a very different way, 1 to 1 to 1 on Tuesday. Either way, interesting flow going on. Speaking of interesting, let's go out to VXX. Mr. Meatball alluded to earlier, the return of healthy, juicy contango on the VIX Futures. That always means interesting things for our friend VXX, who I believe, as your compatriot there, Mr. Rock Lobster, has termed it, is predictably crappy. Very predictable and very crappy when that contango comes back into play. Right now we're seeing that pretty much to full effect. It's off nearly 2 handles from our last show, right around the 23 level here. It was at about 24 3/4 last show. Today's volume about $1.70 on the tape. Actually decent paper, but a little bit shy of the ADV, which is about 225,000. That's also off a little bit, down about 25,000 from this time last week. Let's quickly run through the top 10 here in VXX land. Number 10, SEP 26 is 196. I got VIX on the brain. 19,600 going up there, or I should say open there for number 10. Number 9, 20,000 of the OCT 46s. Interesting. Number 8, the SEP 28, 26,000. Number 7, the first put on our list, the SEP 22 puts, and then it's pretty much all puts there for the rest of the time there, listeners. Number 6, the SEP 18 puts, 28,000. Number 5, the Jan 14 puts, about 29,500. Number 4, the SEP 19 puts, about 30,000. Numero trace here, the SEP 22 puts, 37,700. Number 2, the SEP 20 puts, 40,000. Number 1 with a bullet, still our old friend from last show and from a couple of shows now. It's been open for a while. The SEP 17 puts. Mr. Meatball, we said on last show that these were looking like maybe a bridge too far, the SEP 17 puts. We've seen VXX come off a good amount, but I'm still not feeling the 17 strike. What about you? Have you amended your decision since last week, or you still think 17 perhaps a bit of a bridge too far?
I don't see it. I don't think that we're going to see 17. I'll just be honest.
Yeah, that would be a lot. That would be a lot of predictable crappiness kicking in. But crazier things have happened. But that's a pretty dramatic one. If you're out there on that 17 strike, we feel for you. We feel your pain. Hopefully you got something else against it, taking off some of that juicy premium you paid, because those things not exactly cheap. At least they weren't. Let's see here. All right, today big prints. Actually, some decent sized prints going up today. About 16,000 of the OCT 32s going up. Pretty much mid market. These are nice and tight out here. 38 cents at 40, going up for 39 cents. Splitting the upright opening over there today. So about 16,000 of the OCT 32s. Maybe a little bit of an overwrite. Maybe someone rolling the dice to the upside there. We don't know. It's splitting the uprights exactly. And we've seen interesting bias to the paper. Actually, the open interest right now is about 900,000 on the calls and 700,000 on the puts. So calls are actually leading the dance out here. That is reflected in the paper flow today at least. 10,000 of the Node 42s also going up. These on the bid, they were 32 at 34, going up for 32 cents. Opening as well. These were done tied. So a little bit of a different beast there. And OCT 32s going up again, another 7,500 times. So a total of over 23,000 going up on the day today for 38 cents. This time lifting the offer. And then yesterday, a little bit lighter day. Looks like we saw a roll. SEP 21 puts 1,878 times out to April. 15 puts, perhaps, for 1,871. Either way. Actually, they went up a little bit apart on these, so not quite exactly a spread. But the OI lines up, the volume lines up enough, so probably looks like a duck, and it quacks like a duck. And then SEP 26 is going up 1,400 times. And Wednesday, the big prints, 9,000 of the Jan 22 puts for 270. Again, 2-cent wide market on these bad boys. And then, of course, they're in the money a bit, so makes a little bit of sense. And the Jan 22 call, so a little bit of our old friend, the synthetic / combo going up. You know, we talk about them in VIX a lot. You don't see them as much in VXX. Do you see a decent use case, Mr. Meatball, for doing the old combo in VXX versus something like a VIX?
No. I mean, I guess you'll see that as like a borrow play. If it goes hard to borrow, if you see some like funky stuff there, you'll see combos trade in VXX and UVXY under those circumstances, but generally speaking, no.
Why it kind of stood out to me too, going up 9,000 times Wednesday, I should say, here in VXX land, the Jan 22. Let's just call it a combo for lack of a better term here. Interesting stuff here. Also interesting, again, seeing earnings season kind of winding down, but it was a very interesting season. I encourage you, if you haven't done so, head on over to theoptionsinsider.com. Click on that options news and articles tab there on the top right corner of the homepage. You'll get to all the earnings news, earnings move results reports there. You'll see there was a pretty exciting season, actually, and we still had some names popping off this week. It wasn't entirely done. We had GameStop on Tuesday. We had Oracle and Broadcom yesterday after the bell. We had Duluth Trading before the bell yesterday. So still some names popping off, but very much at the tail end of the season. But the season as a whole, I encourage you, if you're checking out those reports, check out the earnings season report, because that breaks it down by week. And it shows that by the end of the season, which they kind of roughly encapsulate in about 6 weeks here, it has outperformed its own straddle, or the average of the straddle, I should say, by about 114%. So it's outperformed that straddle. Usually if it's 100%, obviously it's exactly in line with what the straddles we're predicting. 114% means slightly outpacing those straddles. And it pretty much was every week except for the final week of the season, which did 82%, so underperforming. But the rest of the weeks, 108% week 1, 102% week 2, 135 was the big week there in week 3, 121% in week 5. So interesting stuff. And again, I encourage you to parse this for yourself over there at theoptionsinsider.com. As the folks at ORAS even told us when they were compiling this is one of the more exciting seasons they've seen in a while. So if you like earnings vol and all that fun stuff, check out those reports as they start gearing up for the return of earnings season, not too far off in the distant future. Meanwhile, it's time for the return of you guys with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's get to it. See what you guys have in store for us this week. Try to get a few more of you on the show. We haven't had a chance to do a lot of questions of late, so we'll see if we can make up some of that today. First off, Elliot. Mr. Elliot says, fun program. Well, thank you there, Mr. Elliot. He says, I like the Spikes inclusion. Well, there you go, John. A little bit of Spikes love for you guys. He's liking the mix, and I'm sure you're going to like when the future is live, too. We can sink our teeth into that pretty soon. He says, my question. I've heard Mr. Longo. Well, he's very formal, Mr. Longo. I like that. I've heard Mr. Longo mention that there might be options, quote, lurking in the book before on the show. What does this mean? What book? Thanks and love the show. Well, I usually use that, listeners, when we talk about these executions a lot here on the show, right? And when we see a funky market coming out, you expect a certain width on a market, and instead it's a lot tighter, or maybe it's a weird level on one of those legs, the bid or the offer. That's when I usually say maybe there was something weird lurking in the book. And what I mean by that is literally just the order book of the applicable exchange, where you go in as a retail guy, maybe you're working a 10 lot at a certain price. And if that's inside the standard market that's being disseminated out there, that's going to be reflected in the order book, and AKA the NBBO is going to be changed to reflect that. So if it's 150 at 151 and an option, maybe that should be a little bit wider than that normally, then maybe you could assume maybe something's lurking in that offer there. So that's kind of what I mean by that, and that's why I sometimes take some of these executions with a bit of a grain of salt there, is that you see these weird prints. Maybe they're working their own order in the book just to move things around. We've seen crazier things happen before. But yeah, that's what I mean by lurking in the order book. John, you've been around at various exchanges for quite some time. You're working at an exchange right now, so you have had some experience with order books in the past. Any nuances you want to share about orders lurking in the book and changing markets for our friend here, Mr. Elliott, who's a fan of spikes, by the way?
Well, I'm glad he's a fan. Shout out to Elliot, thank you. But the book has changed. Back, I think what happens now, that the firms are so sophisticated and so solid electronically that they watch the books. I'm talking from the retail side. Certain retail firms do this. They can watch the book from off floor and route and put in place and send to different exchanges, and they're looking at where they can get the highest probability of execution with the best favorable economics for the customer, and ultimately included in that is ultimately what they pay. Are they a make, are they a take? Is there obviously no exchange fees for the retail people, but the book and its impact on how things trade, it's completely changed in the last 10 years. Back in the day, people would look for orders in the book, and I was actually talking with someone recently that it would almost be that when especially in the equity side and the cash side, when the cash side knew there were large orders around, it was interesting. If the stock was, say, 51 bid at a quarter, and there was a 50.5 bid for 1 million shares sitting on the book, somehow the market got it to where the 50.5 bid was relevant, and then people that were thinking of selling would look for reasons to hit the bid, and inevitably there was this thing that size always, that the market always traded to size, and it would influence it back then. But I don't see the book like it used to be as relevant as it once was. I think you guys are extremely close to it. Most option traders take the offer or hit the bid because of the width of the market. They can get exactly what they want. Maybe in the spreads are a little wider. Maybe they need a little more patience. But in this day and age, especially where the concentration is in the top, 150 names in the first 2 months, I think most people put the position on they want and then wait for it to happen. So I don't think the book is interesting to watch, but it's not what it once was.
No, I'm probably dating myself with that reference of lurking in the book. I probably should update it to the modern electronically routed NBBO reflective, constantly evolving quote in the marketplace. Yeah, because it's kind of not quite the same thing to go park a 5 lot on the Philly the way you used to and be able to mess with things in the market as a result. Not a little bit more dynamic these days, but that's long way around, Elliot. That's what I mean when I say that some of these, it's more that the fact that some of these markets we're getting on some of these names may be a little bit weird, and there could be an order or two perhaps responsible for it. But as John mentioned, he's up to date with the latest technology. It is a very much evolving and fluid process here these days. All right, next up, LLJJ wants to know, this is a topic that's been top of mind for a lot of you of late. He wants to know, did those pricey VXX puts really work out when you factor in the vol implosion in that product over the past few weeks? Mr. Meatball, obviously, we had people writing in a couple of shows ago, I believe it was, saying, yeah, I like this stuff you guys are talking about, the VXX downside, but man, is it pricey. I refuse to pay those levels. And now we have since seen a pretty dramatic erosion out there in VXX, or a pretty dramatic turn to the downside. But as Mr. or perhaps Mrs. LLJJ also mentions, to see the vol come in quite a bit out there as well. So it's always that push and pull, right? Does the underlying move pay for what you're losing in the vol or vice versa? You guys, your crazies have been slinging out there for the past couple of weeks. What do you have to say here from Mr. or Mrs. LLJJ?
Well, that's one of the reasons why things like spreads and bear and butterflies and things like that can work. But yeah, if you bought puts and sat on them the last couple weeks, you're probably up a lot of money. As much as vol is in, it's not in that much. That's why VVIX is still 99. If you think about it, when we have this kind of a violent move in VXX and VVIX or Viking are still around 100, that's going to tell you there's still a big bid for downside. And so I actually think the market is still bracing for another leg down in VIX/VXX/spikes because implied volatilities are not falling as these indexes fall and these ETPs. That's not something we're used to seeing.
Yeah, we're in that weird zone. And we've said it before on the show, it does seem like you could have worked out, even though I know a lot of you were reticent to pay those levels. That's why, as Mark said, we do recommend verticals and spreads, and we've talked about it many times, the ways to pay for that exposure in VXX. It is a bit of a nuanced procedure, but if you do it that way as opposed to just gobbling up thing, of course, even if you just gobbled up, you probably still worked out. We have seen enough of a move to the downside, I think, to offset anything else going on out there. But still, it is an interesting one, and I know an area of continued fascination for many of you out there. Who knows if this move that Mark's talking about materializes? I'm getting the feeling we're going to see more of you asking related questions. All right, a lot of you hit us up about this. We talked about it yesterday on Option Blocks. Kind of funny. This one comes from Nick Johnson. He says, are you guys feeling the Vol Fefe index? If you listen to Option Block, we were kind of joking about this yesterday, listeners. This was, of course, I use the term index kind of loosely. This is an index that J.P. Morgan created because we talked about this a lot on the show. There's that Trump factor out there, right? Whenever he tweets, markets are moving, volatility responds as a result. J.P. Morgan making an attempt to codify that with their own index. They termed it the Vol Fefe to kind of conflate volatility with Confefe, which was, of course, that infamous spelling error that Trump had a year or so ago on his Twitter machine there, his tweets. And so if you're wondering what this is, the folks at Morgan saying, I guess you can file this in probably the duh category. They say Trump's tweets have significantly increased volatility. Yeah, I think we can all agree with that. They also say the frequency of market-moving tweets from Trump has ballooned just this last month in August, which prompted them to create the index. And the U.S. markets are paying more attention. They felt the need for a model to codify all of this and quantify it. They're not just tracking the tweets. They're trying to indicate it off of certain trigger words, including China, billion. I don't know why billion is in there, but billion and products. And they even say themselves, the model, not quite a savant. They say that it produces results that it says are statistically significant. So I'm going to go out on a limb and say they probably say there's a correlation between Trump tweeting and increased volatility. I think anyone with not having a model could probably leap to that conclusion as well. But still, they get points for the name. I'm big on names here, and Mr. Meatball is as well. The Vol Fefe is certainly fun. Mr. John, you're a creator of volatility products. What do you think of this newly minted Vol Fefe index, sir?
Well, it's got a lot of pizzazz, and people are going to pay attention to it. I think anyone in the market, knows that we've had, now it's the president, but if you go back over the years, we've always had people that the original goes back into the 80s and the 90s, the Dorfman, that guys are putting out headlines and the market moves and it reacts to it. So it's a great idea, untradeable, but fun to watch.
Good old Dorfman. Now you're dating yourself. I dated myself talking about the book. Now you're dating yourself.
But I am. I'm an old guy. I'm definitely old.
Talking about Dorfman. He was definitely a market mover back in his day. Mr. Meatball, are you guys in the pit chat? Are you trading fast and furious around the Vol Fefe, sir?
I got to say, I'm a little disappointed that John didn't come out and say that the MIAX is working on a future based on the Vol Fefe index. And because I think that has the 4-year lifespan of a future like that would be absolutely amazing. So I'm a little disappointed in the Miami guys. I just got to say.
No, well, let me add then. So I will tell you, we have had some bulge bracket firms who have come to us with similar ideas that are actually tradable, that we think will but it won't capture the Twitter Trump thing, but the things that he focuses in on, on trade and on markets and on rates, that we think that there is something there, and we are actually working on something that we're working on two products specifically. That our goal is to have them out, very early in the new year. That will be here and available for the markets to trade, through the election cycle. So we are looking at it.
That's super exciting. I can't wait to start trading and tracking all those amazing indexes based on what's happening on Twitter and or China or the word billion. So here's the
word billion.
The word billion.
That one cracks me up.
What about like the season premiere of the Showtime show? Is that going to send the index flying?
That's going to skew Vol-Fefe completely.
Yeah, I know. It's just going to, and so they're going to have to, that will just be amazing.
Is that show even still on?
It is, despite the fact that, that's folks at home, if you're an actual trader and you watch that show, it is infuriating.
It is pretty bad. I watched some of the first season. I had to just turn it off. I was like, this is
ridiculously fake, and not even remotely how. I mean, listen, I am not an insider trader, but if I was, I could tell you exactly how to do it. And the way they do it on that show is completely wrong. So
you don't meet with a trench coat in a dark alley to hand off an envelope full of coded messages or whatever they do there. But, it does bring up a good point. We got to go on with the crystal ball. But, we see there's a legion of lawyer shows. There's a legion of police shows. There's a legion of medical shows. If you were an alien and all you knew about us was our collective pop culture on TV, you'd think everyone in America was a doctor, a lawyer, or a policeman. And yet there are a legion of other professions. There really hasn't been a good television version or depiction of finance in any real good degree, whether it's trading. I mean, there's been a few hot spots, obviously, Creating Places, the infamous movie everyone loves. Everyone loves it because there's not much else really that even depicts it. So there's nothing really that touches on trading, let alone what we're talking about, like pitch trading or things like that. It's a lot of room there, I think, to maybe explore some. Maybe in my free time, I'll have to make that happen. Meanwhile, we'll have to keep on rolling right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball. This is the most dangerous, the most challenging, the most daring portion of the show where we attempt to wrestle with the volatility gods. Mark, maybe I'm going to add a wrinkle for next week because I've obviously got it down. My 1435, which I really wanted, spikes is at a 14.33. So I'm going to call that a bullseye. What do you think we add the wrinkle? We add the Vol-Fefe in for next week. What do you think?
No, I still contend I win.
Let's see. 14. I'm going to go Vol-Fefe of a 6. I have no idea what that means, but that just sounds fun. All right. So, spikes 1433 and VIX cash, was it 1391? You were at a 14. I was at a 1465 because I was charitable. And you're, even though my real heart of hearts, we know, was 1435. All right. And
so
then 1412. 1412 for you.
Yes. So I'll let you go, despite the fact I won. That means I get to pick who goes first. So I'll let you go first, Mark, since you're so affected by.
Well, I was very charitable to you last week. I guess it's only right that you return favor this week, considering I was in my heart of hearts. That's why I said I made sure to say it on the show last week that I really like 14. So I can have it there in the record, so there could be no disputing. And so go back, check the tape, listeners. I did say it. All right. So that fast forward beyond my miraculous bullseye this week. We're looking here, interesting stuff. Maybe a tale of some different term structures out here. We talked about VXX and what's open out there, and also what's open out there in VIX land. And pretty much all VIX land is, as we said here this week, is pretty much leading the dance, all calls all the time, one put. So maybe that gives us one perception. Then we see VXX still slightly biased towards the calls there as well. But, a lot of the flow we saw this week towards the latter portion of the week, maybe today notwithstanding, maybe 50 Cent is back, seems like maybe biased a little bit of the other way. It's a weird time. We're seeing that juicy contango come back. We're not flat anymore. We're seeing VXX maintaining its firmness, shall we say. So vol still staying a little bit juicy. So I see what you're saying, how there could be a sell-off next week, Mr. Meatball. But I think I'm going to stay not too far from where my heart of hearts was this week. I wanted 14.35 this week. I'm going to say 14 and a quarter. So we could sell off a bit earlier in the week, but maybe something will happen. We'll have a little vol fefe kick in, and we'll come right back to where we are pretty much right now. All right, Mr. Meatball, I bought you some time. What are you feeling for next week, sir?
Well, we got the Federal Reserve coming up, so that could be interesting. And you do have what appears to be at least a 1 or 2 week pause in China. So I'm going to go, let's see, what did I guess last week? 14.12?
You said 14.12.
I think that we're going to have the lowest settle of the year for VIX. And we're going to have a VIX with a 12 handle at one point next week. But we end up doing 13.14 for a settle.
13.14. Look at you getting oddly precise here.
Instead of 14.12, I want to do like weird. That's my new thing is numbers that have meaning.
That's your new thing?
Yes.
And I'll put you down for a 2 for the vol fefe. How about that?
Yes. There you have it. And at least a 2. I'm going to say 2.5.
All right, everybody. We're going to have to leave it there. Unfortunately, that music means we come to the end of another excellent sojourn through the world of volatility, vol fefe, VIX Futures, return of our old friend, Juicy Contango, all sorts of good stuff on the docket today. A lot of paper going up. Not so much in VIX options. It was a decent week, but kind of a light week comparatively. But the spikes lightened it up this morning at least, so we'll see if that carries through. Maybe Super Tuesday. Keep your eyes out for Tuesday in Spikes Land. And John, if they're intrigued, they want to learn more, maybe they want to keep track and keep tabs of what's going on with the future and with the Viking, where should they go? What should they do, sir?
Yeah, well, we use LinkedIn, our website, the MJX website, or areas that we communicate regularly through. But we'll have something out there very quickly once we have a date.
There you go. And in the meantime, you can always head on over to MIAXoptions.com/spikes. Click on that. You get a fun little overview video there as well, which if you want spikes encapsulated in about 30 seconds over maybe about 2 minutes or so, then check it out. And of course, in the interim, you can always give them a follow over there on Twitter as well, at MIAX Exchange. That's where all of the stuff comes out when we're not here, gathered together on a program talking spikes and VIX and vol fefe and all that good stuff. And Mr. Meatball, if they want to talk more vol in between episodes of Volatility Views, maybe do a webinar or two, participate in a pitch chat, where should they go? What should they do?
Yeah, so I did a webinar on Wednesday on how Wednesday was how I was trading butterflies right now. So if you want to know how I was trading butterflies on Wednesday, you can go to optionbit.com/FLYOPL, so fly OPL, and you can review that webinar as well as pay $97 for over $900 worth of option services. You get a half-hour session with me. You get our butterfly and condor masterclass and a month of OptionBit Live. Pretty darn good deal, Mark.
The masterclass. So that's like a time. It's like a time machine. They could see exactly what you were thinking on Wednesday butterflies. So if they were wondering about that, there it is. And there you go. MIAX. OptionPit.com is the place to go. Give him a follow on the Twitters as well while you're at it, at OptionPit. You can get all of his webinars, links. You do a lot more on YouTube over there. You can follow those links there as well at OptionPit. We'll even throw one for the Rock Lobster as well at OptionVol over there on the Twitter machines. And on behalf of the Greasy Meatball and John, and indeed myself, I thank all of you out there for downloading, streaming, subscribing. Keep those questions coming. We love you all your VXX downside. Other stuff is also good. Volfefe, you name it. We love it. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.